Good morning, guys, and welcome to today's edition of the London Session Open. My son just walked into the room. He wanted to give me some Play-Doh to eat. He has made some stuff. All right, we're going to take a look at the markets. We're having bearish markets, and the markets are slightly lower in places in Europe and also in the US. So we have a few break of trends that we're going to talk about, and things are changing a bit. And why did that happen then? Well, we had yesterday the head of the Federal Reserve, Mr. Jerome Powell, speaking, and people didn't really like his comments, where he pretty much said it could take longer for the economy to recuperate. Or maybe they were anticipating something else. He did also talk about and said that we might have some more support, both fiscal and monetary stimulus. But what he also said, which I found interesting, and is really my theme that I have been working with, and that is that we're going to have a situation where the unemployment rate is going to maybe peak in the next month or so. That's what he said. And then probably going to have that come down quite sharply. The final bits and pieces, though, to head back where we were before, that's going to take time. That's definitely probably going to take time, just because it's going to take time before things reopen, and that is the challenge here. Okay, so but it does mirror what we see a bit in some stock markets. So let's take a look at the charts, and for example, to give you an idea, let's use the Dow S&P 500 as an example. So you have the S&P 500 that declined a lot, and at the same time the unemployment rate rose sharply, and then Jerome Powell says we probably have maybe unemployment rate peak in the next month or so, and then it will come down, and that's exactly what the stock markets have done now. And at that point down here a few months ago, that's when I was most convinced that we're going to go higher. Now we have all of that pretty much priced in. Now, if we look at the S&P 500, we're still above the May 3rd low, but if you look at the Dow yourselves, then we did take out some trend funding levels as well. If you look at the German DAX, we did take out some trend funding levels there as well. We're going to look at that in a minute. Here, technically, we're still above this level. It's definitely a bit challenging, though. Like, we're so close to the stop. If we get stopped out, it's better just to take the loss, and then we'll regroup and see what we can do differently, if we should do anything differently. Sometimes the market just needs to shake out to sort of start get going, and some short-term downtrends, and then sometimes it just resumes the bigger picture uptrend, and that's what I think is going to happen. But at the same time, I want to respect the uptrend, the whatever way the market wants to go. So again, I'm going to continue to be bullish about the May 3rd low, and if you're not in position right now, there's actually an alternative option, and that is just to be bullish from here, but work with the April 21st level as your stop. So that's the alternative. But for now, I think it's better just to stick with this view here. If we look at the German DAX, I had a trend defining level here at something like 10,368, because I was tracking this higher and higher lows that was in the process, but we traded below that level now, and now we're targeting these levels, and we just need to look at this from a bit of a different perspective. We have all these lows here, and I knew this was a fragile low, or sort of fragile low, but the thing is with all these lows here, should we really be selling straight into these levels where people bought? Probably not. I think we can probably go down a bit more, and then maybe 2 days from now, maybe Monday next week, we could probably go upwards again. That's what I'm thinking. If you're very bearish, then there are better stock markets to trade bearish on, where the technicals look better. But if you really want to trade on the German DAX, then maybe let it go up a bit, sell, and then let it go down. At least for now, the very short-term trend is going to be bearish below 10,710. But again, I'm going to let this go down a little bit, probably maybe early next week. I suspect we're still going to be above this low. Maybe we'll go up, down, up, and then down, and then attack it like that. Gold markets, well, gold price is not really doing anything. It's going up a little bit, but not by much. The outlook remains unchanged. Buy at 1684, stops below 1656. That's what I think the market is looking at. and that's what's been working out lately. It doesn't have to continue to work out, but that's what I think. The alternative, just buy the breakout. Crude oil prices are up a bit. There was some news that Iraq had lowered their production, and that is giving the market a bit of a boost. And then also some news, I think, from Saudi Arabia that made some adjustments as well, but nothing that really stood out to me like a big game changer. Biggest challenge they have, especially in the US, is that demand has dropped with about 30% from last year's demand. So crude oil production though remains relatively unchanged, which means that we've seen these lower prices. Of course, what has happened that the number of rigs in the US have dropped dramatically. So actually, I'll take that back. Production has changed. There's definitely less rigs that are working right now, but that might take some time before that feeds back into the actual price. Now we are, from a purely technical perspective, closing in on 26.48, which is the high here from May 13th, yesterday's high. We might try to push a little bit higher. That can open up a little bit around 28.30, but people sold here on the in April, and yeah, April 9 and April 3rd and April 9th, and expiration of this contract is going to happen on the 22nd. As far as I understand, on the 22nd of May, that's when this contract is going to expire. If you're trading with a CFD broker, it's probably going to expire the day before on the 21st. And yesterday was actually quite interesting. I think we saw some numbers, and it showed that crude oil inventories contracted a bit. But the last reading of the actual amount of oil in storage, I looked at these numbers like last week or something like that. The last number was for, I think it was 60. The number of oil, million of barrels of oil had increased. I think it was like 8 million barrels. So there was less capacity in Cushing, Oklahoma, than when we had this big crash. So you need to pay close attention to that, and let's just see. I mean, it's just 1 week, right? Let's see what happens after expiration when people start to trade the next contract. So the next contract, let me see what that is now. Where is trading? You can buy an hour already, by the way, if you want to, if you have a good broker. So this is the contract for July. And this one looks a bit different, right? Here we're not at all close to its high. The close here is at 33.5. So if anything, if you do want to hold on to something, then this is maybe it, because here you can have a rise of 16% or so before we hit the high. However, though, if we have a situation like this, is the July contract, as I said. So when the May contract went literally negative, this market still had a decline of 36%. So you might still have a decline of 36%. Imagine if nothing happened. We'll be back down here at $17 and at $25 per barrel in West Texas crude oil. So it's very high risk. You need to pay attention to that, and I will probably stay away. I would stay away. I'm definitely staying away. I can tell you like this, from experience, since 2006, I started trading, but I started to follow the market starting in 2005. There's always some crisis. The financial markets are inherently volatile. There's always some crisis somewhere. It might not be, right now we have a crisis, but before that we had like 2 years, maybe a quite quiet time. Obviously you had the whole China-US thing going on, but there's always some big thing happening once in a while. And you have volatility just going crazy. And today is this, 2 years from now, we're probably not going to be talking about this. It's going to be something different. But there's situations where it doesn't make sense to trade. All right, this is the euro. There's no activity here. People are not buying, they're not selling, they're not doing nothing. They're just giving up on this market. I think the challenge with currency traders is the fact that the Federal Reserve have swap agreements with several central banks, not just the top ones. which means that if someone really wants to get hold of a lot of dollars, they don't have to go to the open market. They can just go to the central banks, and that's how they get access to the money. So that means they don't have to go to currency markets. So effectively, I think central banks have actually stopped the currency markets in its track here. Doesn't mean that we can't have some activity, but at least in the Euro USD, the plain vanilla pair Euro USD is not going anywhere. So we need to take out 107.25 for things to get going again. All right. Then you have GBP versus the USD, where you had a break to 122.44. That is working out. The only be where right now everything is coming down. The dollar is gaining a bit against everything, so that's okay. But yeah, so if we go back up to 122.44, I think people are gonna sell. They're gonna attack the low, maybe 121 or 120. But because we took out that low here, and this is like a big double bottom range, we can actually go down to 1852, 1882. Here's dollar yen going back to the midpoint here, so there's not too much to say or do here. We're pretty much trading sideways. I would not get too excited. Let's just wait. I think this is going to trade sideways so longer. All right, let's see if you guys have any questions, but unfortunately it's 10 o'clock, so we need to leave soon. I'll actually need to leave now. They're calling me already, but I'm going to see if I can answer some quick questions. In the chat box, we have Liz. Good morning to you. And we have also HTM, Mojo. Good morning. Welcome to a new normal. Yeah, welcome to a new normal. Sarabjet says good morning from India. Good morning to you, sir. Hope you're doing good. We have Jack as well. Good morning. And we have Marvin. Hope you're doing well. Marvin is asking about the FTSE 100. Yes, we'll take a look at that. Stefan, hey Alex, I just added to my dollar CAD short at 141 again to take advantage of the economic recovery. Do you think this is still a good idea? So we can take a look at dollar CAD as well. And then Sarabjet says stimulus package announced yesterday and market is down. Made $1 million Indian rupees. Similar thing happened in the US. Okay, good for you. I'm happy. Antonio, I hope you're well. What are you gonna plan with gold? Triangle breakout or rectangle chase? And Mauricio says good morning. Good morning to you. And we have Angie as well saying good morning. And Angie says as well that cable is going to fall. Yeah, cable is going down, and from a purely technical perspective, I guess you can just trade that downside on that. There's nothing wrong with it. Just be a bit careful. GBP USD is famous for giving you just a ton of false breakouts. That's my experience as well from trading this many years. It's not really my cup of tea. I prefer Euro USD, Aussie dollar, New Zealand dollar. You have a breakout, the trend continues for a few days. It's not break and then comes back up, and that's why I have like this not very good relationship with GBP USD. All right, I need to leave you guys, but I'm gonna quickly take a look at. So this is the dollar CAD. All right, so dollar CAD, Stefan, as long as you're below 141.73. 76, you should be okay. But if we take out this level, we would have had a breakout of this triangle on the other side, and we can probably go up to 142.68, maybe a bit higher. So you need to be careful with that. As long as you're below that level, I think we can come down to maybe 140, and then we'll see if we go all the way down to 139. And we got a question about the FTSE 100. The FTSE 100 is bullish for now, and is bullish just above 5708. So this is an opportunity to take position on if you want to. I wouldn't go full risk because we're so close to the low. Maybe half risk. Even if you take half risk because the entry is so close to the stop, even if we go back up, you get some very good results on that. The only challenge here is that when we come so close to the stop level, then there's a genuine risk we see continue further decline. And then we talked about gold. So gold, it is definitely some sort of a formation like that, right? We're having something like this. The thing is this though, like all these triangles and wedges and stuff like that, I don't really trust them too much. Let's just wait for the break to 1741. Take that out, we could probably go higher. Then the alternative is just to buy dips. Okay guys, I need to go, unfortunately. Have a great day guys, and I'll see you guys tomorrow around the same time, so quarter to 10 a.m. Thank you so much, and talk with you soon. Bye bye.